With us now on the CNBC Newsline is the analyst behind that downgrade, Bernstein's Stacy Rasgon. Stacy, great to speak with you today. Why the change of heart on Nvidia, and why now, about 2 weeks after that pre-announcement?
Yeah, so the pre-announcement was kind of sobering. I didn't see any rush. We had to figure out what was going on, and we spent the last couple of weeks kind of really going through our model, thinking through the different scenarios and thinking through, just tactically kind of where things are going. At the end of that, where we come out is I have a hard time seeing, even with, giving them the benefit of the doubt and seeing plenty of recovery, I have a hard time seeing more than maybe $7 in earnings in a couple of years. I think the days of putting 30 to 40 times on those kind of earnings numbers are probably over for now. And if it turns out they're not actually, deserving of the benefit of the doubt, I think there could be more upside. And so once you take the time to sort of scrub through things, it seemed like the right call to do. And so we downgraded it today.
So, Stacy, how much of this is an Nvidia-specific story, and how much of it is a sector-wide story?
Well, I think it's both, right? So they already had a fairly sizable step down in November. Remember, the original guidance for the quarter was about $700 million below the street. That was Nvidia-specific primarily. That was an overhang from the crypto bubble, and they had a pretty significant inventory flush associated with that. That was painful, but I can live with an inventory flush. Those rebound after a while. But I think what's going on now is different. They've got a piece of this that they're attributing to macro in China, and that's an everybody situation. But they also turns out that their take-up of their new high-end gaming architecture, which is called Turing, that seems to be considerably weaker than they were hoping. And I think that's a change versus where they were 3 months ago. And that is entirely NVIDIA-specific, and I don't know that that's going to resolve, certainly not in the next quarter or two. We'll see where things go.
So, Stacy, investors in these names have almost silos of worry, data center, auto, crypto, gaming. For Nvidia, which is the deepest silo?
Yeah, you bet. I think there's two silos if you want to think about it like that. The first is in gaming. And the big question to answer there is what actually is the true run rate of the gaming business? This is a business that was run rating, call it $1 billion a quarter, give or take. All of a sudden it spiked to, $1.8 billion a quarter or so, coincident with the rise in cryptocurrency pricing. It's obviously coming down a ton in Q4, but the question of where it actually should normalize to once the crypto bubble is through is an open question right now. Should it be $1.5 billion or $1.8 billion once things settle, or should it be back to $1 billion? Nobody knows. But I think that's one silo of worry. And then the other, obviously, is data center. This is a business that has still been growing. The sequential growth over the last few quarters, I would say, has been getting less and less, and it's been starting to cause a little bit of angst. We're seeing a shortfall right now in Q4, and they were arguing economic situations and push-outs and everything. But the question, again, of what that recovery is going to look like in the context of new competition potentially coming in, at least headline risk, which is always there, which you can maybe forgive when the business is growing. When the business isn't growing anymore, it's harder to forgive it. And so the question of what the actual run rate of gaming of data center is, how big the opportunity is, and what it can do in the face of renewed competition, that's probably the second silo.